I do believe that India has a potential to grow at an even faster pace than this. We are lucky to be in an economy where we are seeing growth happening.
What is Tata Capital altogether?
So, Tata Capital actually started in 2007. We've invested a lot in digitizing our journeys, invested a lot in technology. We've been profitable from year one of operation.
What was the need of the IPO? Hello, everyone. Today, we are in discussion with the MD and CEO of Tata Capital. Welcome, Mr. Rajiv Sabharwal.
Thank you so much, Abhishek.
So, before discussing about anything about Tata Capital, the first thing which comes to my mind when we talk about Tata Group is trust. It's about legacy, it's about faith, and it's about something which is there for everybody who is part of this business. And most importantly, the customers, the investors, and business at large. We are here to discuss about Tata Capital business overview and then also about their IPO. So welcome, Mr. Rajiv, and thanks for giving us time. And before we start to know more about Tata Capital IPO, I would like to know more about Tata. What is Tata Capital altogether? What does the business do? It does.
So, Tata Capital actually started in 2007.
Okay.
We've been profitable from year one of operation.
Phenomenal.
And we are present in all segments of the business. Retail and SME form 90% of our book. Within retail, we have all products, both secured and unsecured, and housing too. In SME, we also have a complete suite of products, and so is there in corporate. Housing is the biggest class of asset which we have. It forms close to about 1/3 of our book.
Oh, so if you have to spread your book, 1/3 is your housing, and then other parts will be, if you can throw a little more light.
So about 63 to 64% of our book is in retail, and about half of that is in housing. SME forms about 26% of our book, and about 11% of our book is on the corporate side.
So, can you tell us how much will be secured and how much will be unsecured? Something light on that.
We are largely a secured company and pretty granular in our book. 99% of our loans are of less than rupees 1 crore on average size.
Okay.
Similarly, in terms of retail unsecured, that forms close to about 12% of our total book. We do believe that remaining diversified and remaining granular helps us in managing our risk better.
That's really great. In fact, the first statement you said that we have been profitable from year one really was an eye-popping thing, because that's something which a lot of companies, or almost every company, aspire for. The from first year you become profitable. So how has been the journey of profitability so far, as until last year?
So the way we look at it is that if you are well spread out in your book,
right,
both geographically as well as across products,
right,
you are able to manage your growth as well as your risk far better.
Mm-hmm.
In terms of profitability, the effort is to keep increasing our profitability, and a right mix of product helps us in that.
Mm-hmm.
As you know, profitability is a mix of multiple factors.
Right.
We focus on improving our yield, improving our fee income.
Mm-hmm.
We've invested a lot in digitizing our journeys, invested a lot in technology. This helps us in managing our cost to income better.
Right.
In terms of credit costs, we have the least credit cost in the industry, and that helps us in ensuring that the book remains very resilient in all points of time.
That's really great. Now, so coming close to like your IPO is around the corner, what was the need of the IPO? Is it because of regulatory compliances, or is it because of the need of the funds? Can you throw a light on that?
The RBI had placed us in the upper layer, and while being in upper layer, you had to follow certain norms which are more bank-like. And besides this, all companies who were placed in upper layer needed to list before September 25. Okay. So we are on that process and on a journey to become equity listed. Anyway, our debt was listed and we were doing all disclosures to that extent. Mm-hmm. But this is a new chapter in our innings.
Oh, wow. That will be very exciting for everybody to know and hear about. So I know this the industry where you are is growing. How do you see this industry panning out to a larger extent? Because financial industry in terms of lending and then you have other investment business also. So can you throw some light in terms of how the industry is growing as such?
Abhishek, we genuinely believe that we are all lucky to be born in this country, India.
Right,
This is the fastest growing economy. The whole environment is pro growth.
right,
We get great support from the ecosystem in trying to ensure that we reach to the last mile. There is opportunity to grow in terms of adding new products. There is opportunity in terms of expanding your distribution network and
right.
going to deeper parts of the country to expand your business. If we look at the India growth story, uh, we will see that we are amongst the fastest growing large economies.
Right,
If India grows at close to about 6.5 to 7%,
right,
credit will grow at about 11 to 12%.
right,
And within that, you will find retail and SME businesses growing at about 17 to 18%.
right.
With that opportunity in place, I think good companies who can raise money at the right price have an opportunity to grow at significantly better rates than the industry growth rate.
Now, these are definitely interesting numbers. One thing which is most important for any financial institution, especially for you, is how you manage your NPAs, how you manage your ratios. So, how do you use technology, and otherwise, how has been the journey so far? And
So, Abhijit, risk and managing NPAs is a function of many things. According to me, it first starts with the culture within the organization.
right,
We do believe that risk comes before anything else.
yeah,
In our team, the leaders would believe that if they have to choose between growth and quality, quality will take precedence over growth.
right,
So, the culture comes first. After culture, we look at the mix of products,
right,
the mix of secured to unsecured, how that is going to pan out. We also look at how data can be used in making our decisions. We
okay,
do invest in best in class systems
okay,
to ensure that we have information available to us as quickly as possible
okay,
in terms of making our credit decisions, even in terms of collections. We look at how quickly we can get information and reach out to the customer in terms of collecting our monies.
mhm,
And we try to do most of it digitally. 98% of our cash movement or money movement happens digitally. And
okay,
all of this actually helps us in ensuring that the overall quality remains good.
mhm,
So it's a combination of culture, the policies which you follow, use of technology and digital to make things happen, and the mix of products, which
right.
ensures that our credit quality is amongst the best within the industry.
Right. That is how I think most of the companies like yours is growing in a phenomenal pace. One thing which I just wanted to know: a lot of people talk about penetration in terms of financialization of savings or financialization of investments and all. Where do you see probably 5 years down the line this industry to be? This growing, doubling or tripling? Because we have seen a phenomenal past, but that is all history.
Yeah.
Any views on that in the overall industry specific?
So, if you look at what's happening in India, one is clearly the growth,
Yeah.
and financial services or availability of credit
Right.
is a very significant contributor to
Hmm.
this growth. We are also seeing investments happening in all areas.
Yeah.
If you look at the government is investing significantly in improving infrastructure. It is also investing to ensure that an environment is created where manufacturing and other industries can grow.
Right.
The right incentives are being provided. Uh, with the growth on the corporate side and what the government is doing, it creates a tremendous opportunities for SMEs to grow.
Right.
And as SMEs grow and they create more opportunities for employment and businesses, the per capita income of the country also grows. And as per capita income of the country grows, aspirations of individuals grow, their needs grow, and that is where the demand for consumer loans and housing grows. So
Right.
we are lucky to be in an economy where we are seeing growth happening on the consumer side, on the
Right.
housing side, on the SME side, as well as in terms of small and mid corporates. So a combination of this
Mhm.
is actually leading to how credit is growing.
Right.
And if you look at the size of our market,
Right.
and if you consider a growth rate of 6.5 to 7%, though I do believe that India has a potential to grow at an even faster pace than this,
Right.
you will see credit growing at anywhere between 13 to 15%.
Okay.
And if you look, consider this growth rate,
Mhm.
our overall credit market has a potential to actually double every 5 to 6 years.
Yeah, obviously at 13 to 14% annually, you are very close to doubling up in at least 5 to 6 years. That's 100% right. So one more thing, you have acquired Tata Finance some time back. So how was the synergies there, and some light, is the entire acquisition done, and how it has enhanced your overall position in the market?
Yeah, it's Tata Motor Finance,
Yeah,
which was
sorry,
a
Tata Motor Finance. Yeah.
subsidiary of Tata Motors, and we thought that it would be better for the two companies within the group to come together. And that's when the boards met and decided to bring these two entities together.
Mhm.
At Tata Capital, we were not present in the commercial vehicle financing space, and
Okay.
it's a large market and a growing market.
Right.
And it gives us an opportunity to be present in a new segment which is
Mhm.
large and growing, and we would like to tap that opportunity in the future.
Mhm.
Obviously, at this point of time, we are working to ensure that that book becomes stronger and gives us a pad for us to grow on in the future.
That is also one of your contributing business way forward, which you foresee. That's great. So look, whenever an organization or a company comes for an IPO, for public it's a different feeling, it's an investment opportunity, and but for the people or the for the itself, it's a great feeling to be. So how does your entire team feels about the IPO around the corner?
No, we are clearly excited. I think each and every member of the team is really excited. We believe this is, Tata Capital 2.0 journey for us.
Wow.
Uh, you know, a lot of things remain the same.
Mhm.
The opportunity for growth remains the same.
Right.
Our investment in technology and digital remains the same. Support from our parent Tata Sons gets even stronger.
Right.
And I believe that it allows us to make our canvas look even larger.
Mhm.
Uh, with larger base of capital, it will give us an opportunity to scale up
Right.
and look at more opportunities in the future.
Mhm.
Obviously, all of this we want to do in a measured way.
Right.
We clearly pride ourselves in being a responsible financial partner, and
Mhm.
we want to continue to be a responsible financial partner.
Right.
We are not chasing growth only,
Right.
we are chasing responsible growth. We are here to
Mhm.
help SMEs grow in their journey. We are here to bring about more financial inclusion. We are here to meet aspirations of individuals. And all of that we want to do in a manner where it creates a win win situation for everyone.
Right, right. You are here for the right set of customers to help them grow. That's the biggest, I think, motive for any organization, and you have summed it well, sir. So, Mr. Rajiv, tell us a little more about how you use technology and Gen AI for your business.
We've been early adopters in the Gen AI space. As always, we've looked at what the challenges in as far as customers or in our internal processes are and tried to use technology to solve them.
Okay.
Each intervention which we do should bring about a benefit for the customer,
Mhm.
and it should make the job easier for us within the organization.
Mhm.
So in Gen AI, we have looked at how we can make credit processing for SMEs much faster, and
Okay.
more importantly, we can make it volume agnostic. So
Mhm.
that's been our first project there. We've also looked at on the servicing side how we can address all customer needs
Mhm.
in a matter of minutes rather than looking at days to solve their issues.
That's very interesting.
We are also looking at how we can use GenAI at our backend to make processes more error-free and make them more responsive to customers. I think there are a lot of other areas where we have identified we can use GenAI. And I really do believe that it's going to be a really exciting phase for us to move on this path of using the upper end of technology to make life easier for our customers.
Oh, great! So this is one of the company which is using AI to its advantage to in multiple things across credit and customer information and lot many things which Mr. Rajiv said. So this entire space of lending is fairly competitive. There are a lot of existing players. There are a lot of new players. How do you differentiate yourself from the competition which is spread across?
So we do believe that in this competitive space, we need to create edges for ourselves which will keep us ahead of competition. The first one which we look at is our own team. We do believe having a set of team members who have seen business cycles, who are extremely experienced and carry a lot of energy to the system is extremely important. So we do believe we have created one of the best management teams, a team which is not only good on quality, but is extremely stable also,
Right.
which is helping us in this journey. The second is, as I mentioned to you earlier, we do believe that risk comes before anything else. So building the right risk culture within the organization helps us.
Right.
Use of technology and digital in making our processes faster and more efficient really gives us an edge when we are interacting with our customers. Belonging to the Tata brand, which is one of the most things we all feel very proud of,
Right.
allows us to not only get more customers in, but also allows us to raise liabilities at the right price points so that our offering to customers can be better.
Right.
We've also kept a complete spectrum of products available with us so that we remain the most diversified NBFC, which can manage risk and growth better, and in all eventualities, remain a company which will ensure that the asset quality remains more stable. Our credit costs are one of the least in the industry, which allows the book to be extremely resilient in all circumstances.
That's phenomenal, because I think credit cost, once what you touched upon, I think obviously any investor will look forward to lend to Tata Group, looking at the kind of a legacy and the kind of quality of the business you are in. One more question, if I may ask, what is the spread of business in terms of digital, a bit of phygital, and then purely physical? If you have to classify among these three.
So we do believe that phygital is the right way to go in India.
Right.
It is very important to be close to the customer. So you need to have branches,
Right.
and you need to have people in the branches to help out customers in case they need any assistance.
Right.
Parallelly, you need to have digital journeys for each and every product of yours so that you can make it more easier and accessible to customers. You can make your processes much faster,
Right.
and also ensure that in case the customer needs anything, you can be a direct to customer brand too. So a combination of all of this allows us to be closer to the customers, manage our costs better, and be faster to serve them.
Thank you, Mr. Rajiv, for your time. It was a pleasure talking to you. All the best for your IPO, and really, like other Tata Group companies, this company will also give a lot of smiles to a lot of investors. Thank you.
Thank you so much, Abhishek.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.